Welcome to It's the Economy, but this is more about markets. The Nifty PSU Bank index is up 16.7% this month, that's September, and 61% from last September levels. The highest gainers have been UCO Bank, the charts will come up for you as quickly as possible, Central Bank and Indian Overseas Bank. Also Bank of Maharashtra. Actually, Bank of Maharashtra is a standout performer no matter how you look at it, month on month, year on year, year to date, whatever. However, we shouldn't get carried away only by the Nifty PSU. It is all mid-caps that are doing well, or many mid-caps. Some mid-cap private sector banks that have surged include J&K Bank, Karnataka Bank and South Indian Bank. Actually, even IDFC Bank will come in that category. To get a hang of what's happening in the mid-cap banking space, in the PSU bank space in particular, I have with me Digant Haria, the CEO of Greenedge Wealth, who in his previous avatar was perhaps the last word in the banking and the NBFC space. Of course, he's a co-founder at Greenedge Wealth. Good morning, Digant. Thank you very much indeed for joining us. Well, first, your overall take. This PSU mid-cap, SBI was always discovered and it had a good run in FY22. But the mid-cap PSU space, you think there is still valuation headroom?
Good morning, Latha. Thank you for having me on the show. See, this whole PSU banking rally, I think it started in 2021 with SBI. Then in 2022, we saw that Bank of Baroda, Union Bank, Canara Bank, they caught up and they rallied. And in 2023, we are seeing the whole long tail of the PSUs, which is, the PNB, Bank of India, and all the smaller ones, IOB, UCO Bank, the four names that you mentioned, they have seen a very strong rally. But let me point out the first, all these small cap, mid cap banks, especially IOB, IDBI, UCO Bank, Central Bank. See, all these banks have 96% of stake, which is owned by the government. So actually, the free float in these stocks is very, very low. And you see that, their price to book, they are trading at 1.5 to 2.5 times book. So almost all of these stocks are trading more expensive than an SBI or a Bank of Baroda, which really has fantastic capabilities as a bank. So I think there is a lot of, I would say irrational exuberance in these small cap PSU banks, largely because there is low float and there is some expectation that they will be privatized. Otherwise, I don't really see a fundamental reason why these banks should trade higher than the better banks like an SBI or a Bank of Baroda or Canara Bank and so on. So those are my opening comments. I think for a serious investor, they have to be cautious in the small cap PSU banks. But the large and the strategic PSU banks, they still offer a lot of value to the investors. And we can talk more on that in the...
Okay. Can you, sift the grain from the chaff, as it were, or, the men from the boys? In the non-SBI PSU bank space or non-SBI, non-BOB PSU bank space, because we analyzed, we had the BOB Deputy Managing Director just recently, on Monday on the channel. I mean, the other ones like Canara, Indian Bank, Union, the bigger PNB. In this set, is there more value to be found? Some of them, for instance, Canara is promising some 3,000, 4,000 crore profit. When we spoke to him, he said every quarter we can do this kind of profit. So is there money in that mid-cap space? Let's not go down the tail.
Yeah, absolutely, Latha, you pointed out. So in fact, we are quite bullish on a Canara Bank and a Union Bank. Because see, we like to classify PSU banks into four categories. The first being SBI BOB. We all know they are good, so let's not talk about them. They will do their own stuff and they'll re-rate over a period of time. The second category, which is, the Canara and the Union Bank, they have, started to come out of their problems. They are not as capable as an SBI BOB, but their capability in terms of lending is far better when you compare it to, say, a PNB, a Bank of India, or, the other smaller PSU banks. And I think this year they are going to report more than 1% ROAs. Like we as analysts, investors always used to think 1% ROA is the peak. But I think this is the year where even these Canara and Union will report higher than 1% ROAs. And there is a good valuation headroom. Like they are at 0.8 times.
Why?
I think they can
Digant, why would you want them to do that? Because, my worry is that the best of margins is behind us. The Reserve Bank may have stopped hiking, but all the hikes have not been passed. And plus, they are now out to tighten liquidity. You can see that first ICRR. Now they'll perhaps do the VRRR or something. But they want to keep liquidity tight till they're very sure of inflation. So isn't the best behind most bank results, no?
So, Latha, I think the best could be behind for, say, SBI and BOB, where credit costs have fallen to 0.3 or 0.4%. Credit costs cannot fall below this. But if you look at Canara, Union, they are still at 0.8 or, around 1% of credit cost. I think the corporate credit cycle is so good that, this year we'll see some bit of recovery. So these credit costs still have some room to go to, say, 0.6 or 0.5%. And that will actually drive this higher than 1% ROA. So you're right that, the best in terms of margins is over. But, I think the best in terms of credit quality is still not over. In fact, for these two, Canara and Union, this year will be the best in terms of credit quality. And for the next lot, which is PNB and Bank of India, the FY25 is going to be the best year for the credit costs going down and earnings jumping up.
Okay.
So
one more red flag. One more red flag. You're right that credit costs, before that favorable base kicks in for banks like Canara, we can get a couple of quarters more of very low credit costs. But are you confident of the retail lending ability of all these banks? See, HDFC Bank, ICICI Bank and all were in retail over a period, and so was Bajaj Finance. Whereas some of these banks are new to retail. So, I mean, would you worry that when the cycle turns, if it does, when it does, there is a greater ability to hurt? And I also want your opinion on the tail end, the UCO centrals. Would you touch those?
So good, good thread of discussion. Let's see, retail, I think SBI is the only one which has a lot of retail ability. 38% of their loan book is in retail. The next bank which has some sort of retail ability is Bank of Baroda. They've been trying for the last 3 years to do SME and retail in a reasonably big way. So I think Bank of Baroda will do well. But, when it comes to a Canara Bank, PNB, Bank of India, Union Bank, I think the retail capability is very, very low. And if I talk about the smaller ones like UCO, and I think it is non-existent. They don't do anything beyond home loans. So you're right that there is no retail capability in most of these banks, which is why, Latha, in my opening remarks, I said that for a long-term investor, SBI and Bank of Baroda can really have lower cyclicality, because whenever the cycle turns, these two banks will probably face lesser wrath of the asset quality cycle because more presence in retail. But when it comes to Canara and Union, I think the cycle is good for next 1 or 2 years. So they will be more like medium-term bets for investors, not a buy and hold and forget kind of, something that you can say for an HDFC, ICICI. You can't say that for Canara and Union. Leave alone the other ones. Other ones fall even lower in terms of capability.
Okay, got that. Most useful. Actually, in this... in the September bulletin, RBI has also put out some data on household savings, and it is at, for me, it's all-time low. Maybe it's like some 25-year low. It's a little worrying. So that discussion with economists, of course. Let me come to those mid-cap private sector banks. Is there something outstanding in Karnataka, South Indian, J&K? All those have just flown away.
Let us see. I think... there is, the cycle, when the cycle is so good, even the worst players start reporting good asset quality. They don't lose money, the interest income when you recognize NPA. So I think all those things are just helping these banks deliver some kind of earnings growth. And see, the markets are really tired of the large ones like an ICICI or an SBI or a HDFC, Kotak. So, the market is saying, where is that incremental delta? The large banks are anyways growing at, 12 to 18%, which they're supposed to do. So where is that incremental delta? I think that incremental delta is, either in a Canara or a Union, or it is in these smaller private banks that you said, the Karnataka Bank. See, these banks were trading at 0.4, 0.5 times. Still, they are not trading at 1. And see, in bull market, we don't think that, okay, Karnataka Bank and South Indian Bank cannot make sustainable ROEs of 14%. But, in bull markets, we get carried away and we say, okay, next 2 years they'll make. So, let's worry about the sustainable ROEs after 2 years and not today. And that is what is playing out in these banks.
Excellent. Okay. My producer is warning me 1 more minute, so I have to ask you about that one tired bank that you spoke about, HDFC Bank. They revealed some numbers. Some near-term worries are there in terms of ROA, 1.9 to 2. We would have expected better, and peer banks are doing a little better. So would you buy them at this hour of trouble? HDFC Bank.
See, I think, so HDFC Bank, I don't think a lot of this was unexpected because,
Yes.
HDFC was builder loan heavy. When you classify builder loans into the banking format, the regulations are different. So NPAs go up, there will be some income reversals and so on. I think that's okay. My bigger worry is that, when deposit growth in the system is not strong and HDFC Bank really has to grow its deposit by 16-17% so that it can grow the entire loan book base by higher number. I think that is my worry, but that we should have it in the base in a quarter or two. After that, I think the compounding machine will kick in. So maybe this 1 or 2 quarters is a good time to accumulate, not negative on the stock because the valuations are very, very cheap. But I think there is still 3 to 6 months of time before the earnings actually start becoming interesting to the investors.
Okay, that's a very useful conversation, Digant Haria. I'm sorry the time has come to an end, but pleasure listening to you on all the points that you have made, that you would go to the top-rung mid-cap PSU banks, where there is still some credit cost advantage for the next couple of quarters, or maybe even a year. Let's wrap up on Bazaar on that note. Markets a little under pressure, but not so much the mid-caps. Chartbusters have a lot of information for you. Stay tuned.